Hello everyone, today is July the 5th and I've got a few news stories to share with you that have just come out. First off, we're going to start with Binance Australia says it's cooperating with authorities amid regulatory scrutiny. Binance is under increased scrutiny as Australia's financial regulator reportedly conducted office searches. Binance appears to be back in hot water. Australia's financial markets regulator, the Australian Securities and Investments Commission, ASIC, has reportedly conducted searches at the exchange's local offices, the cryptocurrency exchange. ASIC reportedly carried out the searches on Tuesday. The move is part of an ongoing investigation into the now defunct local derivatives business of the exchange, according to Bloomberg's anonymous sources. We are cooperating with local authorities and Binance is focused on meeting local regulatory standards in order to serve our users in Australia in a fully compliant manner, a spokesperson for Binance Australia told Decrypt. When Decrypt contacted the ASIC for confirmation of the searches, the regulator did not respond at the time of writing. The regulator's review of the derivatives operation includes an examination of the firm's classification of retail and wholesale clients. Binance Australia's license for its derivatives operation was cancelled by ASIC in April. The exchange thus announced it would wind down the local derivatives exchange but maintain its spot trading platform. The company had previously closed the derivatives positions of some Australian users, citing that they were incorrectly classified as wholesale investors. Next up, we have another story from Binance. Binance and Coursera team up to improve global blockchain education. Binance Academy, the educational arm of the cryptocurrency exchange Binance, has announced a collaboration with Coursera, a worldwide leader in online education with more than 124 million registered users. The result of this partnership will be a full suite of learning programs that will roll out over the next several months and beyond, providing educational possibilities to people all across the world as per the latest information shared with Finbold on July the 5th. Individuals who are interested in gaining a fundamental knowledge of blockchain, Web3 and crypto technologies, as well as those interested in building the appropriate skills to seek a career in the blockchain sector, will find that these courses are well suited to their needs. Digital certificate. Learners will be awarded a digital certificate of completion upon successful completion of these courses. This credential may help learners show their skills and open up new prospects in this fast-developing industry. Yi He, Binance co-founder and chief marketing officer, stated, "Education is the cornerstone of progress and innovation. This is a belief that has guided us at Binance Academy as we strive to make the revolutionary world of blockchain technology accessible to everyone. Today, we're thrilled to announce our partnership with Coursera." She added, "Together, we're combining the strength of two industry leaders with a shared vision to provide the best-in-class education that will drive adoption and build the foundations for Web3. According to a paper titled Time for Trust by PwC, this technology has the potential to improve the working conditions of more than 40 million employees throughout the world by the year 2030. There is a significant increase in the growth rate of the industry's need for qualified crypto and blockchain workers. In 2022, the need for blockchain programming skills increased by a factor of 552%, as stated by a study that was compiled by DevSkiller from over 200,000 skill assessments. Experts from the Binance Academy will be responsible for developing the programs. Each learning program will consist of multiple different courses, each of which will contain video lectures, readings, practice tests or projects, as well as evaluations that are graded. This partnership with Coursera adds to the current worldwide education efforts of Binance Academy, such as the creation of multimedia material, learn and earn campaigns, and the university outreach program. Next, we have a story. Fed economists warn of unprecedented financial stress among US firms. In an unsettling revelation, two Federal Reserve economists have recently issued a comprehensive report that portends a potentially worrisome state of the American economy, noting an unprecedented level of financial distress among non-financial firms. According to the research note, since March 2022, the tightening of the US monetary policy has led to a striking escalation in the number of these firms grappling with financial strain. A remarkable 37% of firms are now said to be under financial stress, a figure that surpasses those seen in most previous instances of policy tightening since the 1970s, according to the report. The economists posit that this bleak situation may herald significant impacts due to the Federal Reserve's stark hike in interest rates. They suggest that the true ramification of this policy shift might be only now starting to emerge and could be considerable. The complexity of predicting these effects is acknowledged in the report, yet initial calculations seem to hint at a possibly substantial impact on investment and employment, considering the higher percentage of currently distressed firms compared to previous tightening cycles. The report adds, to start with, total investment in our sample of publicly listed firms accounts for about 60% of aggregate US investment, and aggregate investment is one of the most responsive components of GDP to monetary shocks. Employment within these firms constitutes about one-third of total US non-government employment, according to the report, which adds that given these figures and the current 37% distress rate, estimates suggest that the recent policy tightening is likely to have effects on investment, employment, and aggregate activity that are stronger than in most tightening episodes. The researchers forecast that the reverberations of these policy changes will likely peak between 1 and 2 years post-shock, indicating that 2023 and 2024 might see the most significant effects. An alarming possibility raised by the Federal Reserve economists is that the tightening policies could nudge these financially distressed firms closer to the brink of default, which could lead to a surge in bankruptcies and layoffs. The economists caution that their analysis may undervalue the real impact on employment, as policy-induced bankruptcies could cause layoffs not accounted for in their data. As Crypto Globe reported, in an assessment of the world economy, HSBC Asset Management, the investment arm of the banking behemoth, warned that the United States is set to face economic headwinds in the latter part of this year, in what could potentially usher in a global recession. Next up, over $450.3 billion in BTC gradually amassed by long-term Bitcoin holders, says analytics firm Glassnode. Long-term holders have been gradually accumulating Bitcoin for nearly 2 years, according to the crypto analytics firm Glassnode. Glassnode notes in a new tweet that long-term holders have amassed 1.01 million BTC over the past 602 days, bringing that cohort's total supply to 14.47 million Bitcoin, just 20,000 BTC short of the all-time high. The analytics firm also notes that shrimp holders, meaning addresses with less than 1 BTC, have been aggressively accumulating Bitcoin at a rate of 33,400 BTC a month. Glassnode says there have been only 130 out of 5,263 total trading days, roughly 2.5%, that have recorded a larger monthly position change. The shrimp cohort now holds 1.33 million BTC. Bitcoin is trading at $31,017 at the time of writing. The top-ranked crypto asset by market cap is up 1.3% in the past 24 hours, around 0.7% in the past week, nearly 14% in the past month, and roughly 87% since the start of 2023. Despite the massive gains this year, Bitcoin remains around 55% down from its all-time high of more than $69,000, which it hit in November 2021. The crypto analytics firm Into the Block notes about 75% of Bitcoin holders are making money at Bitcoin's current price. The firm also says 69% of Bitcoin holders have held onto their Bitcoin for more than 1 year. Next, we have another story about Bitcoin. Bitcoin prices are hot, but here's what could crush the rally. BTC has proved incredibly resilient to the perils of the past year, including FTX's demise, but there are some macroeconomic surprises that could erect obstacles to further gains. We're starting today's column where we left the last, asking, will macroeconomic narratives subside? The answer may be ultimately a bit nuanced. Macro factors will always play a role, but some key issues have been occurring in a relatively predictable fashion, especially as they relate to inflation. Save for a few hiccups, inflation projections and the Federal Open Market Committee's FOMC expected response with interest rates have been played out as expected. BTC prices are up 87% year to date and seem to have found support near $30,000. Ethereum has risen 64%, trailing BTC, but still impressive nonetheless. Both have largely shrugged off this perilous period for the overall crypto industry. Something called the Anchor Volume Weighted Average Price, AVWAP, of Bitcoin helps to show that. Volume Weighted Average Price, the VWAP, is a technical indicator that lets traders determine the average price of an asset, taking volume and price into account. The AVWAP does the same thing, but lets traders anchor their starting points to a customized date. Bitcoin's AVWAP, since the US Securities and Exchange Commission's lawsuits against Binance and Coinbase, is 9.1% lower than where BTC currently trades. The AVWAP, taken from November the 9th, 2022, the day Binance scrapped its proposed FTX takeover, is $22,632. Anchoring from when Celsius paused its withdrawal in June 2022 shows an AVWAP of $21,400. In other words, Bitcoin has bounced back from a series of bad events. The latest industry catalyst appears to be BlackRock's recent filing for a spot Bitcoin ETF. The question now is, what could go wrong? What macroeconomic developments could send prices lower, eroding the aforementioned gains? Reading through some of the more recent speeches by Federal Reserve Chairman Jerome Powell indicates that the FOMC is resigned to continuing its current course of action. The market appears to be expecting at least 2 more rate hikes in 2023, topping out around 5.6%. If that occurs, it's difficult to imagine a significant shock to prices in either direction. It's likely already priced in. But there are a few other macro factors that warrant attention in crypto markets. Banks passed the most recent stress tests. One of the largest news stories of the year was the collapse of Silvergate Bank and Silicon Valley Bank. Since both had ties to crypto, the news reverberated throughout the sector. Their failure led to thoughts that FOMC rate hikes had gone too far, creating too much stress among banks. However, recent stress tests that were administered to 23 systematically important banks showed they appear to be well positioned to weather a severe recession and continue lending to qualified households. The test assumed an unemployment rate of 10% a 40% decline in commercial real estate and a 38% decline in housing prices. The FOMC may feel that it has enough room to aggressively raise rates despite the impact that may be felt. Subsequent weakness in the economy would be painful, but would likely bring inflation down without cratering the banking system. Consumer revolving debt continues to rise. Revolving debt is at all-time highs. This is an area that doesn't get a ton of attention, but is still significant. Crypto investing continues to have a large retail component. Glassnode data show 1.3 million BTC held by investors with less than 1 Bitcoin, and that population has grown 73% since 2021. Increases in credit balances in conjunction with higher interest rates and potentially lower employment concern me as far as crypto investing is concerned. That pesky yield curve is still inverted. The spread between 2 and 10-year US Treasury bonds is deeply inverted, with its negative 1.08% spread the largest since 1981. Historically, inversions are often followed by recessions. However, the FOMC's most recent summary of economic projections does not appear to be forecasting a recession. Still, this disconnect between economic history and economic forecast implies a degree of uncertainty that may not be priced in by markets. As an investor with a bullish bias, it forces me to ask, what if I'm wrong? I don't think I'm alone. As more investors ask this question, a reluctance could grow when it comes to deploying capital to crypto assets. And finally, Valkyrie refiles for spot Bitcoin ETF with Coinbase as surveillance partner. The asset manager first filed for a spot Bitcoin exchange traded fund in January 2021. Valkyrie Digital Assets refiled its application for a spot Bitcoin exchange traded fund with the U.S. Securities and Exchange Commission, joining asset managers including BlackRock and Fidelity in taking another stab at the process. The Tennessee-based asset manager filed a new 19B-4 paper saying that crypto exchange Coinbase would act as the partner for a so-called surveillance sharing agreement, which is supposed to help prevent market manipulation and has been a key part of all ETF applications in the past month. The Wednesday filing says Nasdaq, the exchange Valkyrie would use to list the ETF, executed a term sheet with Coinbase, which Valkyrie said is the largest United States-based spot trading platform for Bitcoin. BlackRock and Fidelity filed renewed paperwork last week. The asset manager first filed an application in January 2021. It refiled paperwork with the SEC on June the 21st, naming Nasdaq as its chosen exchange and changing its ticker symbol to BRRR. Valkyrie already has a Bitcoin futures ETF listed on the exchange. That was approved in May 2022. That's all for today, or that's all of the news stories so far today. If there's anything else that comes out, I will be sure to keep you all updated. If you enjoyed this video or found it helpful in any way, I'd really appreciate it if you would hit the like button and leave a comment to let me know your thoughts on today's news. Also, don't forget to hit the subscribe button and the notification bell so you don't miss out on future updates. I hope you all enjoy the rest of your day, and I'll see you later.